careful of that. And it's not a good attitude to have, because it lands up costing them. But directly, immediately from a financing perspective, I mean, when we bring Christian on, you'll see, if you apply for a loan in your personal name, the loan is for you in your personal name.
Yeah.
Now, the bank will look at your affordability, will look at your liabilities, will look at your income and your expenses. And now you've got this expense that sits against your income because you've taken out a loan. And you cannot make that up anywhere else, because you're going to lose disposable income as the more loans you apply for in your personal name. If you do it in a company, the loan doesn't sit in your personal name, which means that theoretically, when the bank does an assessment on you as an individual, it's not going to pick up that expense that gets taken off the income, because that expense sits in a company name. All you've done is assigned as a surety, which is a piece of paper. That's it. Financially speaking, it's not a liability or an expense in your personal books, which means that you can sign as a surety for more and more property. So for every one you do in your personal name, potentially you've lost 4 deals that you could have done through a company.
Exactly. And the beauty is that that also complies with National Credit Act, which is good. But obviously, we need not encourage reckless borrowing. Just ensure that you can afford to do that. But then there are insurance that you can take against such a default in rentals by the tenants that can actually also protect you there. But what you just mentioned is actually good. So we need to speak to Christian to join us in this platform so that we can take the structures and then look at the financing component of this structure. Talking about the structures, and you mentioned the issue of protecting property portfolio. What happens if I've got properties in my personal name? How then do I move them or fix that? Is it too late for me? What do I do going forward?
So it's never too late. And that's something that people need to understand. Never, ever too late. What I normally recommend that my clients do, by the time they come to me, they're sometimes panicked because they've either heard me speak or they've read articles on structuring. And now all of a sudden they're panicked because they realize, oh, if I pass away tomorrow, I can pay up to 41% of my estate in taxes and costs. I don't want that to happen. Or, you know, a bunch of other questions. Oh, if I structure it in a certain way, I get great tax efficiency. So they come to me panicked. And I think what we normally try and do is say, listen, you know what, let's calm down and let's try look forward. Now, if we look forward to who you're going to be or how you're going to do your property journey or your investment journey, let's just set it up now, so at least moving forward, no more mistakes happen, right? And that's first and foremost, because by stopping right now, you've still got a chance of improving everything without necessarily having to pay an arm and a leg to try fix what's behind you. Let's do it so that you don't have to fix what's in front of you. That's phase one. That kind of calms a person down, because once you set that limitation on error and you know that the area is being contained, it's still there, but it's in a box. And this box is going to be dealt with, but at least it's been put in a box and it's not going to flourish and get bigger and bigger. So that's phase one. Phase two is then to do an assessment on moving these assets into the appropriate structures. So what we do at Intergen is we call it an asset protection, like assessment or analysis, asset transfer analysis. And what we do in this analysis is it's quite complex, but if I have to try simplify it, we look at things like, what did you buy the property for? How much money is still owed to the bank? Do you qualify for financing? Is there leverage or equity in the property that we can use up? Based on what the property was bought for, what is the current market value? So what has been the appreciation over time? What are the transfer costs? Is it in a company? Is it in your personal name? We look at all these elements, and all these elements will give us an answer. Because if, for example, the capital gains is very little, maybe it's not too bad. Maybe it's something we can move, with relative ease because you know what? The capital gains is very little. There's been very little appreciation. Some people buy it. Like, so for the other day, I was looking at a property here by where I stay. And 2 years ago, it was bought at 900. And now I went to make an offer and I was only willing to offer it at 800. Nice cash flow. I could get about 2K a month from this property. Not a big deal. It's not massive. It's just a nice little thing on the side. 2,000 Rand in my pocket for doing nothing. But capital appreciation, don't count on it. Because in the last 2 years, it's gone down. And these are market-related prices. I don't see it shooting up anytime soon. But in cases like that, moving the property is relatively simple because there's no issue. You're just moving basically an income-generating asset that has an increase in value. So capital gains tax isn't a consideration. Yes, sometimes there's transfer costs, but maybe we're lucky and we don't move the property, we move the shares in a company. Maybe we're lucky and we don't have to pay a conveyancer to do the transfer because we just move the shares across. So a whole range of different things. So for example, if you owe money to the bank, we also need to consider, but if we move it, is the bank going to be okay with that? Will we need to apply for refinancing? Will the bank allow us to refinance in the new entity name so that we can pay it off in your old entity name, if you want to put it like that? But these are all things that we do day in and day out. Like we know it, we understand it. Just by looking at your figures and all the information you give us, it's a quick answer. Well, not a quick answer. It takes a lot of assessment, but it's a quick process for us where we already start thinking and the wheels start turning. And it can be done. And what we sometimes do is if we find that there's a lot of cost right now to do the asset transfer, sometimes you can split it up over time. So that box with the problem can get smaller and smaller and smaller and smaller. 10 years, 20 years, and then you've got almost nothing left.
Cool. What I take out of this is that my mess can be fixed, which is good. Guys, does anyone want to ask a question before I ask my questions? Because I've got plenty. Come on, guys. I see Kutle, Lesego, I don't have anything. Mugwayo, talk to me, Barami.
Hi, Shilly.
Mugwayo. Okay, Mugabe doesn't want to talk to me. I'm going to pick on you. You know I do pick on you. Sulufel, you wanted to ask a question. We don't ask on chat. Come, talk to me. Sulu?
Yes, hi.
Yeah,
hi,
there we go. There we go. Talk to me. What's up? Talk to me.
Yes, I wanted to ask Bruno,
Sure.
if I don't want to draw any income or dividends from the company at this stage because I don't want to pay any extra tax, can the company pay my expenses, like your school fees? Can it pay my car installments or things like that?
All right. So it's let's answer this question.
I think Bruno, before you even, I'll put a huge disclaimer because she just said, "Can I take my personal expenses and put them in a company?"
So I think there's a big difference, and please don't quote me on this. And I'm going to ask Shillyboy to delete this portion of the recording at some point.
Then don't say it. Don't say it because I'm not going to delete it.
So there's a very big difference between. So if you ask me, what does the law say? I'm going to be upfront with you. The reality is, personal expenses are personal expenses. Business expenses are business expenses. There are certain things that overlap and sit in a very gray area. So for example, if at home you do work, you can always deduct some of those expenses that you know, the expenses that you incur to do that work from home. You can sometimes deduct it, right? And you can run this through your business. So maybe there's internet expenses, phone expenses, cell phone expenses, vehicle expenses. There's a couple of things that you could probably run through the company that's legitimate, where we don't need to go and bend over backwards to try to convince SARS that it's an expense that it isn't. But the reality is that there's a line that from a legal perspective, it starts becoming, it's not even blurry. It's just outright SARS. If they realize what you're doing, they won't appreciate it. So that's so for example, with school fees, there's a way of doing it. I've seen people do it through using things like bursaries, where the application of certain bursaries through companies. It's something that can be done. But legitimately, when you try sell this to SARS and SARS decides that they want to audit you on it, are you going to be able to realistically say, listen, this was an actual applied bursary? And I think that's where you do need to be very careful. What I'd suggest is, so I do a lot of the tax law, yes, but I'm not as au fait with it as my tax practitioner is at Integer. So my suggestion is come in, give us your ideas and say, look, these are a bunch of expenses that I do feel relate to my work. Can I run these through the company so that I don't have to declare dividends? And we can look at it and say, yes, no, yes, no, yes, no. What we can also do is you can keep the money there and you can keep it invested. And the money will just build up and put it in an investment somewhere. You could, for example, pay yourself a salary if you have to pay yourself a salary. And that, yes, you might have to pay tax on your personal income, but maybe that actually doesn't work out too bad depending on what your tax rate is. So I think we would need to look at it holistically to properly advise you.
Yeah, I think just to add on what Bruno is saying, Sulu, I think the issue of family maintenance, things like bursaries and home expenses, this is where what you call family trust comes in. So that can actually be catered under there, because on an issue of bursary, what do you call school fees payments, recently it's becoming a bit strict when it comes to tax, because what the argument is that the bursary that you're going to afford to your kids, it needs to be sort of a public, it needs to be on merit, meaning that it needs to be something that any public member can actually be eligible to. So it becomes tricky, especially on private companies. I would rather say things like that, rather cater them at the family trust level rather than trying to put them at the company level. You're just more where you're just creating a lot of potentially tax audits, and you don't want to go through that process. You can just park that at the family trust and enjoy life. You can. That's where the kids are being called trust fund babies. So you can just keep everything there and then let your kids live a decent lifestyle without any worries. More legit. So any further question, guys? I'm gonna pick on you. We're running out of time.
Just to go on that question, what's interesting is exactly what you said. Leave it at the trust level, because at the end of the day, what we want to do is we want to run expenses through it. Do it at the trust level, and you could actually pay tax at the beneficiary rate, which if your kids don't have a tax rate, it would be nothing. And you could actually run that income directly to your beneficiaries. So Shillyboy is absolutely right. It's why do it in a company. If your only intention is to use it and get short-term tax savings, then maybe just do it in the trust, get the income through the trust.
Cool, man.
Okay.
See, okay. There's
I was going to ask. I was going to ask Bruno.
Sure.
Can you incorporate foreign assets, like assets held in other countries, in a South African trust?
So that's actually it is a good question. So I'm again, when it comes to things like the Reserve Bank and the tax implications of it, I would probably need to bring in my tax guy to discuss it. Insofar as assets are concerned, nothing stops us from owning different assets from different places. So there's no real restriction on that. So from an ownership perspective, it's there are ways of doing it. There are certain restrictions, but that is not something that I necessarily specialize in. I've got specific people that I deal with when it comes to international ownership, especially if we start speaking about offshore trusts or offshore properties and things like that, and which companies, whether we as a trust in South Africa can actually own it. I remember, if memory serves, there's actually massive issues when it comes to ownership, especially when it comes to properties. So when we work with UK-based investment firms, we normally just set up the structures directly from there. We don't use any South African structures to do it.
Okay. And then just one more link to international. If you've got international trustees, and let's say they are on temporary visas, and those visas expire, are those trusts still valid?
International trustees that are temporary visas and they expire. I'm not
Yeah.
going to lie to you. Your question is so specific that I've never actually had to find the answer. Temporary visas. So I'd need to just quickly check the limitations. So people in South Africa can be trustees basically on passports. I don't recall anything specifying that they have to be in the country or that they have to have visas for the country. But you know what? That is something that I'll probably need to look up for you and maybe get back to you on, because I wouldn't have that answer on top of my head. I'm really sorry.
And I'm going to hold you accountable for that in our next session, just specifically for that. I saw Sipe wanted to ask a question. Sipe? Okay. There was someone wanted to ask when Ronald was asking. Okay. If there's no one who wanted to ask, sorry, Kamai?
It was me.
Yeah, please go ahead.
Going back to the issue of a family trust, I think I've read somewhere or watched a video or something where they were talking about the conduit principle with the beneficiaries. Is there in the future, can you foresee that principle being revised by SARS?
There's been a lot of talk about doing away with the conduit principle. And there was even a report at a stage that was submitted regarding the conduit principle. But when we went through the report, if memory serves, it never spoke about doing away with it. There were just tighter control mechanisms being put into place. So to answer your question, can it be done away with? I mean, it could potentially. I mean, some other countries don't recognize it. But the reality is, once you create an environment that's reliant on certain principles, you find that all of a sudden doing away with them creates more effort than it's worth. And if we also bear in mind that a lot of the people in our country that would make laws like that to begin with, because it's not a SARS decision, it's a national decision. And I highly doubt that anyone would be interested in having to unbundle all their assets that are being held in trust, because a primary principle why the trust exists is all of a sudden being done away with. It would be too sudden. It would cause too much of a wave. I don't see it as something that overnight, 1 year, it's going to be in the budget speech and all of a sudden it's going to be done. So to answer your question, it's very, very unlikely.
Cool.
Sorry, Shillyboy, before we end off, because I see it's already 1:45, I wanted to actually just touch on, so again, when it comes to the international side of things, not my expertise. So when I mentioned the difficulty about holding assets, so there is a way of holding assets through asset swaps, but as far as I can tell, and I had a quick look now just to double check, holding offshore assets is a mission. There are certain very exceptions, or there's ways of doing it, but it's 95, 98%. It cannot be done directly in a very clear-cut way. So the only ways of doing it actually end up being complex, which is exactly why I said, even in the UK side of things, most of our guys just go and hold the assets directly in their own personal name, because the ASA trust cannot hold it directly in its name unless those certain exceptions are dealt with. But again, that's not my speciality. So if that is something worth exploring, maybe it's a nice question to ask one of my international, like offshore guys.
Okay, Bruno, we kind of came to an end, guys. One bonus question for me to starting the session late. Is there anyone who wants to ask a question, or should I just throw my last question?
Lissejo here.
There you go.
All right. Regarding the, drafting, well, having a company or a trust, for company trust, how can you structure in a way where it doesn't need to be audited and also to bypass the National Credit Act for both company and trust?
All right. So that is quite an involved question that we'd probably need to sit down and explore. The bypassing of the National Credit Act can be done with relative ease if the company that you set up meets certain criteria. Generally speaking, it's an annual turnover or net asset value of above a certain amount, million rand. You also look at the size of the transactions. So transactions to juristic persons or companies above 250,000 rand, you can also exclude from the National Credit Act. So that's one way of doing it. A trust, you can exclude from the National Credit Act by having two trustees. And then by having two trustees aside from the independent trustee. So the number of trustees actually plays a part in order to have it considered a juristic person. And again, being a juristic person, you could probably do a loan of a certain amount and try and exclude it from the National Credit Act. So there's ways of doing it. Again, you need to ask yourself the why. Why is it necessary? Because remember, a lot of the banks, especially when it comes to home loans, for example, use the National Credit Act as a guideline in any event. So even if you could argue that the transaction is excluded somewhat, they still don't want to recklessly lend. So they still follow their due diligence because not for home loans. I mean, maybe for commercial financing, that's a good question to ask. But then, setting it up as a proper structure is paramount. For home loans, do it. But you'll find that the four major banks, I don't think they place too much weight on that because they would still be looking at you as an individual to see whether you can afford to pay off your debt.
And I think, Bruno, she raised a very important question because it links up with why it's so important to actually have minimum 3 trustees, including independent trustees, because there's an issue of alter ego where you don't want a situation where a trust becomes what we call extension of you, which do away with the asset protection that you're trying to achieve. And also the issue of some loans, if you were to happen to lend to your trust and you've got less than 3 trustees, meaning that such loans you might have to register them with National Credit under National Credit Act. So, and you don't want to do that. So the takeaway here is just make sure that if you're going to register your trust, you make sure that you've got minimum 3 trustees so that you comply and make it easy for yourself going forward. I think with that in mind, thank you so much, Bruno, for joining us. Thanks. And thank you so much, everyone who joined us. And I think because of this, the investment structure we discussed today, there was a component of financing around the investment structure. So I want Bruno back with Christian. They need to sit here and tell us Bruno needs to tell us he structured this investment structure, and Christian needs to tell us how do we then take this investment structure that Bruno has created and bring together an easy way of raising funding with the banks? Because with this Corona and COVID, it's becoming very hectic and very difficult to actually raise loans with the banks. I hear that the turnaround is becoming quite an intense thing. And so we want to ensure that when we leave the platform, we've got a strong structured investment structures that can easily attract funding from the banks. So with that, I'll hold you to accountable, Bruno. Let's make sure we get Christian in the house and have a discussion with him together with our guys. Guys, please be on the lookout. In the next 2 weeks, we should be able to bring Christian, provided the diary allows. and then we can have engagement further on the financing side of things, because we want to make money, and to make money we need to get funding from the banks. Other than that, keep well, be safe. See you in the next 2 weeks. Cheers, guys. Thank you so much for having me.
Thanks so much. Cheers, guys.
Cheers,
Thanks for
Bruno.
having me.
Bye.
Thanks, Bruno. Cheers, Bruno.
Bye.
Thanks. Bye.
Thank you.
Bye-bye.
Cheers, guys. Bye.
Wow.